Hi guys, it's Alpha Blue and you're welcome back to my channel. If you're new to this channel, you're welcome. So guys, in this video, I'm going to be teaching you a very valuable lesson about your stop loss. This video will help you know how to place your stop loss, where to place your stop loss, so that you don't get stopped out. So the first thing I'm going to tell you in this video is I'm going to try and debunk a very popular cliche that you must have heard in this Forex industry, and that is that you should always place your stop loss very high above the wicks or way below the wicks so that you don't get stop hunted, by the market or the manipulations of the banks or big institutions. Believe me, guys, that's just a very common cliche. It doesn't matter how far above or below the wicks or obvious levels you place your stop loss. Once you don't trade properly, once you don't do your analysis right, once you don't have a proper setup, no matter how far your stop loss is, you're still going to get stop hunted, or you're still going to get your stop loss is still going to get taken out. Believe me, I for one, I've had a trade where I had like a 40 pip stop loss. You can imagine a 40 pip stop loss. And that didn't stop my stop loss from being taken out. 40 pips is usually someone's take profit, but I mean, I still got stopped out of that trade. So it doesn't matter how far or how wide your stop loss is above a week or above a level, below a level. Once you don't get your analysis right, your stop loss is still going to get taken out. Believe me, guys, this is a very, very valuable lesson that everyone should learn. This is a very, very important hack that everyone should learn. If your analysis is not right, if your setup is not right, it doesn't matter how far your stop loss is, it's still going to get stopped out. So you need to stop thinking that way. So how then do you set your stop loss? Your stop loss must be according to your setup. There's another thing that most traders do. They always want to have a 10 pip stop loss, or a 5 pip stop loss, or a 3 pip stop loss. You don't decide how your stop loss should be. You don't decide what your stop loss should be. The setup dictates what your stop loss should be. I mean, it's very simple. The setup dictates what your stop loss should be. Whatever setup you have, that's what your stop loss will be. You can't just have a predetermined stop loss and say, I want to always have a 5 pip stop loss or 10 pip stop loss. Now, let me use this particular trade I'm in as an example. This trade, my stop loss is exactly 5.6 pips. And I wasn't stopped out of this trade. 5.6 pips. And I'm still currently in this trade, even though the trade is kind of misbehaving. But I mean, once you get your analysis right and your setup is right, you can even have a 2 pip stop loss, 3 pip stop loss. It doesn't matter. Whatever the setup gives you, whatever that setup gives you as your stop loss, that's what you're going to use. So that is just the secret behind setting your stop loss. Your stop loss, it's your analysis, it's your setup, your particular trade setup that determines what your stop loss is. Then you need to be very, very careful, study the chart, study the market structure, and that's what will make you have a very, very clean setup and consequently have a clean SL. Now, for example, this particular trade idea, this level you see right here is uh, a resistance level that I had marked out on my chart. It's also an order block that I had marked out on my chart. So I was waiting for price to come into this place right here. Once price gets to this place, what I was looking for was to see a change of character to the downside. Then I look for another order block where I'm going to short from. Now, this is on the 15-minute time frame. Now, if you check right here, you see a very, very clean indecision candle. Very clean indecision candle, followed by a strong bearish candle, a very strong bearish candle that pushed to the downside. And this bearish candle is what led to the break of structure right here. You see this candle here, it broke structure. Now, this particular area here, it's my order block that I'm willing to short from. And as you can see, I placed my stop loss just on this week. I didn't even take it above this level, this whole place. No, I just placed it at the end of this candle. And then it's just 5.6 pips, guys, and I still got an entry, and the trade is currently running in my favor. So what determines your stop loss is actually a proper analysis and a proper setup. That's what will save you from being stopped out. It doesn't matter how wide whether you use a 20 pip stop loss. Don't get me wrong, you can be using a 20 pip stop loss. So far as your setup or your analysis is right, you can still win a trade. You can still win the trade. But for you to just have a setup for a setup sake and saying that let me set my stop loss far above or below the wick so that I don't get stop hunted, that will not save you guys. That will not save you. You will still get stopped out. So your proper setup, your proper analysis is what will determine how valid your stop loss will be, and not just you placing it above or below a wick. Once you do your proper analysis, you set your stop loss. Whatever that particular setup, whatever your setup gives you as your stop loss is what you're going to use. And when you use that, you just place your trade, stay put, stay calm, and let the trade play out. If you get stopped out, your risk management will save your ass. If you don't get stopped out, you hit TP, fine, that's a winner for you. With a good RR, at the end of the day, you're still going to come out profitable. So that's the secret to setting a stop loss. And I hope this was helpful to you. If this was helpful to you, please kindly like this video and hit the subscribe button, share it to your friends, and let them also know or learn this secret about stop loss. So guys, cheers and see you in the next one.